Now, a lot of you are watching this video because you don't know what to do when bottoms form. When things are looking very bearish, how does the pendulum swing from bearish to bullish? In this presentation, I'm going to break down exactly what to do. I do have a free newsletter, so if you do want to find out a bit more about my research, please do check it out. The link to that will be in the description. But remember, all of this is according to my own research and my opinions, so this is not financial advice. Bottoms, the problem with bottoms is a lot of people want to be a hero. They want to catch, the last tick, the last wick, the last bit of the bottom, but nobody rings a bell at the bottom. Nobody will come along and say, this is the bottom. You won't get a angel on your shoulder saying the bottom's in, the bottom's here. You'll never know when the bottom is in. You will never be able to go bottom. I know that sounds a bit strange, but you'll never be able to go bottom, right? You'll never be able to go, yeah, it's in. You'll know about a bottom usually. It sounds weird, that I keep saying bottom, but we'll go with it. That you keep saying a bottom is in, you will know a month after. So there's no point in just saying, yes, the low is in, it's done, it's time to go. You will know usually a month or two later because these things do take time to pass. So saying it's cheap based on, vibes, it's too weak. Like, what does it mean? Like, it's cheap, it's in, this is the low, bull market, here we go. It's too weak of a justification really. And most people freeze instead of start acting. They wait for that perfect entry. Let's say a couple assets at the minute, gold and Bitcoin to name a few, they're going down. People will just wait. Oh, it's going to go lower. It's going to go lower. It's going to go lower. It's going to go lower, and then they've not even invested and they're just waiting. So in my opinion, I'm going to share some tips and tricks how I think to have a better approach for this. So first of all, you need a reason to buy. So not a feeling. You need an actual solid reason that you can explain literally to a 5-year-old. So it's cheap. The bottom's in. It's not a thesis. Like, what does that mean? Like, you almost want to be able to explain to somebody, hey, this is what to do. You're like, this is what happens when a bottom forms. Or this is my reason to get back into a market after so happens. Or not even that, just this is my reason to maybe risk more when, these things or these conditions are met, right? So a real reason which has evidence behind it. So something you can point to, that could be like a level, a signal, a divergence, something that, that isn't too complicated that you can easily go, I think things could change. Now, you're probably going to get it wrong the first time. And maybe the second time, but maybe that third time is where, you get it right. So these theses aren't like, that you will create and you'll think of and that I, think of all the time. They're not theses that will play out at the first attempt. They will take, maybe 3-4 times to actually play out. And yeah, look, vibes change daily and reasons do not. Like that, if you have a structured reason that you can explain to a 5-year-old, that doesn't change, whereas your opinion and your feeling will. Remember, you've really got to, leave your feelings at home. So look, reason 1, early strengths. This is more of a technical analysis way of doing things. So this could be a high-low forming. This could be a reclaim of a key level. Maybe you've got a yearly pivot level and or you've got your pivot levels, let's say, and support 1. Maybe price reclaims that after being below it for a couple of months. Okay, cool. I think we're going to be going back up for a few months. Or maybe you've got a monthly pivot. You start to close above that monthly pivot on a couple candles. Maybe we have a really bearish month. Let's say, for example, massive red volume on the weekly, and then we don't do anything for a while and we start to reclaim some levels. That could be a reason. And you rarely buy at the exact low using this approach. Like that, let's say that red candle example, bang, that's the low, let's say, and it just goes like that for a while. You'd be looking to buy, I don't know, let's say, for example, you've got let's say, yearly pivot. So yearly pivot there, red candle on the weekly, bang, that's the bottom, but you wait till it reclaims that yearly pivot. Like, okay, cool, I'm back in. So you're never going to catch the bottom, but you're not going to be guessing because you're going to wait for something that is whatever you decide it to be. They're just a couple of examples. And it gives you, a level to manage risk again. So if the early strength fails and price breaks back below, you have a clear point that tells you the thesis is wrong. So you already know when you have like an early strength reason through technical analysis that, okay, cool, I'm wrong here. And you can easily define that. So, I don't know, a moving average crossover could be good on a daily chart. That could be another one. So you're never going to catch the bottom, but you're going to catch there. And then you'll be able to ride it up, which typically can be really good entry zones because you won't be catching the falling knife that everyone talks about. more of a fundamental analysis one. Now, I'm not really a fundamental analyst, but wanted to put this in there. So you could be thinking of something that's cheap relative to its own history. So this stock is really cheap compared to the rest of the stocks in the S&P 500. I think this is a buy because of the earnings. These sort of things, these typically can maybe be, a technical analysis one could, it could be on a 1 hour, a 4 hour, a 12 hour, whatever. These could maybe take weeks to play out if it's maybe a earnings thing, right? So it could be a bit slower. But you can put them together. You could even say like, right, okay, cool. When this moving averages crosses, I'm going to do well. And when the valuation reaches this level relative to other things, I'm going to do it. You just need to find something that you can stick to for the long term and that you actually think, yes, this is perfect. This is what I'm going to apply over and over again, because that's ultimately how you win. So a real life example is Microsoft. So putting, both these reasons together, you could argue Microsoft at the minute is fundamentally extremely cheap compared to the rest of the Mag 7, the top stocks, whatever. You could say Microsoft is a great buy now. You could say Microsoft's earnings are better than, I'm just making this up, 95% of the top 100 stocks in America, but it's, down from its highs of whatever percentage. I'm going to buy it. That could be a reason. An EMA crossover and high time frame on Microsoft could be a great place to get entered or start entering again. The RSI, I'm not too sure what these are, but these are just some examples because Microsoft actually has come down a lot relative to some other stocks. The RSI, it could be in 30. Okay, cool. Microsoft is great because all the other stocks, are 60, 70, whatever. This is relatively cheap. A good example, and this is something I just thought of, something definitely worth maybe for me to check out and share with you guys, is you could do maybe an RSI where, say, Microsoft is 30 on the RSI, and then you could do maybe, I don't know, if the S&P is higher than 30, maybe it's a good buy. That's just something I thought of just on the spot. That could be something. But remember, none of it's predicted. These are just some examples of like Microsoft could actually be hitting some of these things where, you could have been waiting for a bottom to form for ages, but you could actually apply some of these things and actually get a really good entry onto Microsoft shares. So one thing to kind of, end on is don't go all in. You want to probably scale in. You want to have okay, cool, I'm going to buy on when it reclaims a monthly pivot. And then when these daily EMAs crosses, I'm going to add a bit more. And then when it goes to here, I'm going to add a bit more. So you're scaling in because you might just get one and then bang, goes down. If you were to go all in on your money and then go down, you're going to lose a lot. So when you're in these types of situations, you want to scale in. And then one thing that I think that works really well is, let's say what I like to do is, and I show this in other videos, I have a 33-day EMA and a 200-day EMA. So when they're bullish on that particular asset, I will risk more. So let's say, for example, they're bearish, my max risk might be 2%. If they're bullish, it might be 3% because the trend is going up for now. It's not going to work every time, but this tells me that I could be a little bit more aggressive. So that's a good example of scaling, what to do. So you want to build the positions, and scaling removes the pressure of being exactly right on that first time because you will get more capital to enter back in. And this is how conviction's built. It's not assumed. Each stage you add a position should be earned by the market confirming your thesis, as I mentioned earlier. So yeah, look, stop waiting for bottom, start waiting for a reason, then build a position and do not assume. All right? Don't use vibes. Wait for early strength if it's technical analysis, or just wait for a valid reason, whatever it is. You've got to think of your own, do your own research. And ideally, you get some factors at the same time picking off, and make sure you scale into your position. If you do want to find out a bit more about how I put research together and so on, please sign up to my free newsletter, and I will see you in the next one.